Bitcoin is holding strong above 100K, ETFs are absorbing, corporates are stacking, and new Bitcoin treasury companies are popping up every week. But here's the uncomfortable question no one's asking. If Bitcoin is the best risk-return asset in the world, why is everyone trying to outperform it with leverage? Are these companies actually helping Bitcoin, or are they just reinventing the crypto casino in a TradFi wrapper? Today we're going to unpack the leverage cycle that's building beneath the surface. And we ask the uncomfortable question, are we at risk of forgetting the reason why we hold Bitcoin in the first place? It's definitely not hard to be excited and extremely bullish right now. Bitcoin has reclaimed 100K, and it looks far more comfortable at six figures than it did just a few months ago. Institutional demand is rising, ETF inflows are accelerating, and every week new Bitcoin treasury companies are launching with one goal: stack more Bitcoin per share. This is, of course, bullish for price. Momentum is strong, and we may be on the verge of the next explosive leg up in this cycle. But it's this new wave of leveraged Bitcoin equity, or LBE companies, that deserve a closer look, and perhaps from a different angle than we've taken in previous videos. Michael Saylor in Strategy obviously pioneered the playbook, but now companies like 21, Strive, and now Nakamoto are promising to take it further, to outperform Bitcoin itself by using corporate leverage and financial engineering. They're calling it Bitcoin yield, but is this innovation or just fiat leverage wrapped in Bitcoin branding? Let's be honest, issuing stock and debt to buy Bitcoin isn't a breakthrough. Yes, Bitcoin is the best performing, most secure asset on Earth. So in a way, this is engineering with the best building block possible. But when we start to hear talk of 1,000x returns and unlimited upside, it starts to feel a bit disconnected from reality.
If you want 10x your money, you buy Bitcoin. If you want 100x your money, you buy Bitcoin with someone else's money. If you want 1,000x your money, you buy Bitcoin with someone else's money, and then you leverage the Bitcoin. It's not complicated. It's not even risky, in my opinion. It's just novel.
This sounds clever and very alluring, until the tide turns. These companies are issuing shares, or creating equity out of thin air, and selling it to people who hope they'll continue to outperform Bitcoin. That's their product. It's not a new app, it's not an economic good or service. It's repackaged Bitcoin exposure, with counterparty risk, management discretion, and sometimes hidden or potentially dangerous leverage. Here's the key distinction. Real Bitcoin adoption happens when a company earns revenue and chooses to store retained earnings in Bitcoin to save and protect their wealth. Synthetic Bitcoin exposure happens when a company raises money from speculators and uses it to buy Bitcoin, promising that they can outperform through financial strategy. One creates value, the other amplifies volatility. And when times are good, both can look smart. But when the cycle turns, and historically it always has, the liabilities remain even if the Bitcoin price doesn't cooperate. And that's where things can go very wrong very fast. If you're a high net worth individual or company looking to take your Bitcoin strategy seriously without the noise, consider Swan Private. Swan Private is the premier service for thoughtful long-term Bitcoin accumulation. With dedicated advisors, advanced custody support, and world-class research, the Swan Private team helps you build generational wealth the right way. No altcoins, no distractions, just pure Bitcoin wealth creation. Learn more at swan.com/private. And this Thursday, join Swan for a live conversation with Lynn Alden on how Bitcoin fits into retirement portfolios, especially as even US states begin building Bitcoin reserves. There's a link in the description, so register now to secure your spot. Now, earlier in this cycle, many of us, including myself, wondered if alt season might finally be over. But now, as we watch an explosion of leveraged products built on top of companies like MSTR, it's clear the speculation hasn't disappeared. It's just migrated. It's altcoin dynamics in a new wrapper, speculative flows chasing performance, but this time dressed up in corporate structures and wrapped around Bitcoin. And that brings us to risk. On a recent episode of What Bitcoin Did, on-chain analyst James Check shared a sober warning. Layering leverage on top of leverage is a recipe for eventual collapse. And this cycle is already showing signs of a synthetic capital war among companies trying to be more Microstrategy than MicroStrategy.
I view MSTR as an incredible trading vehicle. I think it's something that you can have incredible ups and incredible downs. And if you want to experience Bitcoin in 2013, MSTR is pretty much your simulation event of that. So that's pretty much what I think on that front. Once the Saylor premium gets to 2x and 3x, that is where he has the most capacity to sell stock and buy Bitcoin. So for me, that's actually a signal that's bullish Bitcoin. I'm actually a Bitcoin bull on the spot level because he's going to buy, and I do believe he's got diamond hands, he's not going to sell. So the more that Saylor premium goes up, the more he's going to want to sell to capture that yield, essentially, which is the premium between his stock and the BTC price. There's then also like the levered products, the MSTX and MSTU, I think. not financial advice, but if I'm going to give any financial advice, don't touch that shit, guys. Those things are destined to go to zero. They are not 2x levered long MSTR. They're 2x levered long intraday in the time when they're trading. They rebalance every day, and there's a thing called drag. It just, what you can see how you go down like 85, 90%. These things get killed. So just be super careful. Don't touch that stuff. So look, I think at the end of the day, they're packaging up securities and they're selling them to Wall Street. They're packaging up volatility and they're selling it in various forms. Bonds that pay 10%, bonds that pay X%, the stock which is volatile. It's basically choose your weapon, right? What kind of exposure do you want to Bitcoin? And it's fascinating. And, I think 21 is coming out. We're going to see more of this. I would just say that, like, I'd love to see Bitcoiners doing more than financial engineering, but also that's where we are in the cycle. So we'll see how it goes. I think there is a risk that a lot of this stuff blows up, particularly the 2x levered and 3x levered and all this stuff. That's, there's a lot of risk that's baked into those. So look, I don't think MSTR, I don't think strategy's got any risk, but leverage on leverage on leverage creates leverage. And that creates, that's a widowmaker trade. So you got to be careful.
So here's the deeper issue. The goal of Bitcoin was never to beat Bitcoin. It was to own it, to hold a permissionless asset outside the fiat system, to settle value globally without asking anyone's permission. But as this market cycle gets more obsessed with ETFs, tickers, and financial derivatives, we risk drifting from that vision. We're watching a subtle shift unfold. Bitcoin on-chain usage is stagnating. Brokerage exposure is rising. Transactions are more and more moving off-chain, handled by institutions and custodians. If we're not careful, Bitcoin could become just another back end for legacy finance, where coins move as IOUs between large institutions. That's not the revolution many of us signed up for. That's the status quo with different branding. While many of these new companies aren't bad actors, they're building towers of abstraction atop Bitcoin's foundation, and every tower carries risk. Because when the cycle turns, these capital structures will be stress tested, and many of them won't survive. David Bailey, the CEO of BTC Inc. and newly announced Bitcoin LBE company Nakamoto, was recently on CNBC's Crypto World saying his company aims to be Microstrategy squared.
All we care about is that our shareholders are getting more Bitcoin per share as they hold our shares, and that's what they're going to measure performance by. We think also our Microstrategy squared approach of underwriting these opportunities globally is going to allow us to compound the growth of our balance sheet at a faster pace than really anyone else out there in the market. And I think that's going to result in the highest Bitcoin yield number that's out there as well.
It is bold, and it may help Bitcoin reach more global capital markets. But let's not lose the plot. If you don't hold your own keys, if you can't settle a transaction without permission, if you're just writing a ticker and not running your own node, you're not really in Bitcoin. You're in a Bitcoin-themed investment with all the risk and none of the sovereignty. Bitcoin doesn't need clever marketing. It doesn't need leverage. It doesn't need financial games. What it needs is conviction. It needs people who use the base chain, run their own node, validate the rules, and help protect the 21 million cap. So while leveraged Bitcoin equities may outperform in the short run, performance isn't sovereignty. And the long game is about sovereignty. So stay humble, keep stacking, and run your own node. And the next time someone tells you about a company beating Bitcoin, ask yourself, are they creating real value or just repackaging risk? Because Bitcoin is the asset. Everything else is exposure. And in the long run, exposure always comes with strings attached. If you want to meet with the builders, thinkers, and leaders who still get why Bitcoin matters, join us in person this June in Prague for BTC Prague, the biggest and best European Bitcoin event of the year. And this September in Washington, D.C. for BTC in D.C., where Bitcoiners are taking the fight to Capitol Hill. Bitcoin isn't just a number on a screen. It's a network, a movement, a mission. So come and be a part of this movement ushering in the Bitcoin era. Visit btcprague.com and btcindc.com for more info and tickets. And a quick shout out to Mara, the largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. Do you think these new Bitcoin treasury companies are helping adoption or just adding more risk to the system? Would you ever think of holding leveraged Bitcoin equities instead of self-custody Bitcoin? I'd love to hear your thoughts on this, so leave your comments below, like this video, share it with a friend, and subscribe to the channel for more content like this. Thanks for watching, and remember, TikTok next block.